Good morning, everyone, and welcome to another edition of Messer Financial Group's webinars. This morning, we're very lucky to have a product expert with us from Aetna Supplemental Lines, Mr. Jamie Sarno. And just want to let you know that today's primary focus, since we're so close to AEP, will be helping to increase your knowledge base so that you can meet and fill the needs of your clients as they point out questions or concerns that they have about what product that they may have in place, so that you're getting ready to put in place for them, whether that's a Med Sup, a Med Advantage plan, or maybe they're in a difficult situation with their PDP or still on original Medicare. What we're looking for today, though, is, again, to be able to recognize how to best meet those needs of those clients. And if you like what you see today, ladies and gentlemen, which I think you will, I would ask that you log on to messerfinancial.com and go to your online contracting portal, and be sure to get contracted with us as soon as you can so that we can get that processed and that you're ready to sell for the start of AEP. So again, kind of what we'll be looking at today are products that best fit needs left open by Med Sups or Med Advantage, original Medicare, or PDP issues. And Aetna Supplemental Lines have tried to meet those in every way possible. Just to give you a little background on Jamie, I consider him a product expert from our time together. Based on the fact that he's gone from being in the field as an agent, still writes a little bit of business today, but has moved up with Aetna to the point where he has had a hand in the development and design of the number of products that we're going to talk about today. So we'll be looking primarily, again, at their protection series. We'll be talking a little bit about the hospital indemnity flex plan, the cancer, heart attack, and stroke. We'll take a look at dental, vision, and hearing, and then a little bit of home care for those people that are concerned about not wanting to be in any type of facility if they do have to have a procedure done and want to come home to recover. And then we'll do a little Q&A at the end to wrap up our day. So with that, I'm going to turn it over to Mr. Jamie Sarno, and let's enjoy ourselves and learn a little bit. If you do have questions, please try to hold those to the last 10 or 15 minutes, and we'll try to address those in the Q&A section. All right, Jamie, take it away.
All right, thank you, Jeff. I really appreciate that intro. Good morning, everyone. We'll make this hour. We're gonna get the most out of it that we can. So I'm gonna burn through some slides here, and we'll have the questions at the end, and hopefully you get something out of this. But my intro into any house has always been on the changes and cuts to Medicare. I never was an agent to go in and really put down whatever carrier that they have, because then they would just clam up and they'd say, oh, I want to talk to my agent. So I made it to where if that potential client could see where Medicare was doing all the dirty work and making all the cuts, that was just a great way for me to get in, to win over their confidence, and to show them products that would really enhance their coverage and give them protection. So what I'm going to show you here is this. I use this chart every day. I've taken it to Kinko's, laminated this thing on cardstock, and I show this to my client. These are real cuts to Medicare. It all started with the Affordable Care Act. And these cuts, $716 billion is coming out of Medicare over a 10-year period. So it's a 10-year reduction, 2013 to 2022. So we're really right smack in the middle of it. But what I want you to look at is this. See hospital services? You see $260 billion in reductions from hospitals. So that's Part A of Medicare. And you think, it's already hard enough to stay in a hospital. They're doing hip replacements in 24 hours now, but you're looking at typical hospital stay 2 to 3 days. So how do you cut $260 billion more dollars out of something they're already cutting? Medicare is coming down hard on hospitals for what hospitals are doing in Medicare's eyes is costing them a lot of money. And what you'll see here is this. Hospital readmissions cost billions of dollars each year. You have a patient in the hospital, they're admitted as inpatient, They're in there a few days, they have whatever procedure done, they get discharged from the hospital, go home, and within 30 days of being discharged, they come back to the hospital again. That's a true readmission. And Medicare does not like that one bit. They didn't like it that they had to come in the first time. Medicare feels the hospital should have done a good enough job to where they definitely didn't come back a second time for a readmission. So now Medicare is penalizing hospitals by fining them. And here's what they're doing. Hospitals penalized in 2018. If you look right smack in the middle of the screen, you'll see maximum 3% penalty. A hospital can now be penalized anywhere from 0 to 3% of their total Medicare reimbursement if they have too many of these readmissions. And what they're looking for are 6 specific conditions. They're looking at pneumonia, heart attacks, chronic lung disease, knee and hip replacements, coronary artery bypass surgery, and heart failure. So think about that. A hospital, how in the world, if you're the hospital and you have a patient that's coming back in, you can't stop them at the door and say, hey, we're going to get penalized if you come in. We can't allow it. They're going to have to let that patient in. So it's very hard on the hospitals. They're trying to do a good job by following up with patients when they're discharged with maybe a little bit of home health care, phone calls, making sure that they've taken their medication, that they were newly prescribed, but still these penalties are real. It's hard for hospitals to stop readmissions, but they're trying. So that's one way that they're cutting these billions of dollars out of there. And this is just an example. This was South Carolina, just did a presentation there. You can see, if you look at the top, you'll see 2013, 14, 15, 16, 17. These are the penalties that these hospitals paid. And I'll go to page 2, and you'll see it's all over the place. It's from 0 and up. You see a lot of zeros at the bottom there. Some hospitals have more than others, but it's a big deal, and it's real. Now, the second wave that's come that hospitals are very concerned about are these Medicare audits. I don't know if any of you heard of Medicare recovery audit contractors, and I'm building this up so you'll know exactly what to do with these products. But these Medicare recovery audit contractors, they come into hospitals. They are allowed to go through all the medical records of any patient that is on Medicare, and their job is to look for patients that have been admitted as inpatient but really shouldn't have been. Medicare has strict guidelines now that say when a patient should be admitted, when they should not be admitted. And if the hospital does not follow those guidelines, Medicare will take the entire payment back from the hospital. If they make the wrong decision, they lose all the money. It's not up to 3%, it's all of it for that patient. So you have hospitals in a very difficult spot right now with readmissions, with these audit contractors coming in. And by the way, these contractors, the way they make their money, they get a percentage of whatever they find. So they get a commission on finding out where the hospital made a mistake. So Medicare is paying the contractor. So it's a vicious thing if you're the hospital. You can't stop these things from happening. But as time has gone on, Medicare has figured out how can we control readmissions and how can we control these inpatient stays. Well, they figured it out, and a lot of you know this already. It's called observation status. Over the past year and a half, I've noticed that the agent field force out there, they're hearing it from their clients. Oh, my husband was in observation, my neighbor, myself. Hospitals had figured out that if a patient comes back as a readmission, don't admit them, place them in the observation status. They can keep them 1 day, 2 day, 3 day. The most I've ever heard is 5 days. An agent told me her father was in the hospital 5 days for pneumonia as an outpatient. When you're in observation, everything flows through Part B of Medicare, not Part A. So you're definitely an outpatient. And this helps also, let's say someone comes in with chest pains. They check them, they're not having a heart attack, but they need tests. Don't admit them, place them in observation. So that's going to help the hospital control these penalties and fines. So knowing where it came from is a big deal. You know observation status, but it's important to know the history of it and why it's happening. So here is the observation toolkit that hospitals have to follow. And I'm going to speed through this because I want to get to the product. But Medicare has what's called a 2 midnight rule. If the patient's going to stay 2 midnights, if that admitting physician feels that they're going to stay 2 midnights, they can admit them as inpatient. But if they don't think they're going to stay 2 midnights, they better place them in observation. And again, this is just Medicare verifying the 2 midnight rule is real, but hospitals have a big problem knowing when a patient's going to stay 2 midnights or not. So the 2 midnight rule did not reduce the gray area. So hospitals are having a big problem trying to figure out when to do this. So it's gotten so bad. I found this on Amazon Prime, patient status pocket cards for physicians. This is to help the physician determine if the patient should be admitted or not. So it's gotten that bad. Now, what happens is this. We all know traditional Medicare, when you have Medicare and a Medicare supplement, it's normal to go into a hospital for your 3 days. If you're in a hospital for 3 midnights as an inpatient, and then you move to a skilled nursing facility, typically, you're going to be in there the 20 days. Medicare will pay for those 20 days of skilled care, but it must follow a 3-day inpatient hospital stay. With observation, it has put a monkey wrench in that. Now, if you're in the hospital under observation for 3 days, you're not going to get your 20 days paid by Medicare. So that's a huge problem for seniors or anyone else that's on Medicare. Inpatient rehab is covered, outpatient status, no. NBC, and we have this video available. Jeff will have that, and we'll make sure that you all get the link. It's a YouTube video. This woman right here that you see, 79 years old, broke her leg, was in a hospital 3 days, did not know she was being held under this observation status. Her rehab bill was over $28,000. So what's happened from this? Lawsuits abound because they were placing people in observation status and seniors are unaware of it. Now hospitals must approach the patient if they're in the hospital within the first 36 hours of being in that hospital under observation status. The hospital is going to have to come to them with this form right here. Medicare Outpatient Observation Notice. And what this explains is this. It lets the patient know that they're being held in observation and everything is flowing through Part B of Medicare. This form just says to the patient, you're responsible for 20% of what Medicare approves. Well, we all know if they have a Medicare supplement, and most do, that 20% is going to be paid by the Med Supp. But if you look down the second half of the page, it talks about the skilled nursing care, a 3-day minimum inpatient stay. That's the only way that it's going to be paid. It will not pay for observation. They then have the patient sign the bottom of this form, date it, and timestamp it. So I've been asked, what happens if the patient refuses to sign this? Well, the answer is right here. If the person refuses the notice, the hospital staff will record the refusal. And basically, it's not going to do the patient any good. The hospital has to give a disclaimer saying, hey, you're in observation, you're going to be responsible for these things. So that's a huge problem. So what we're going to do, I want to talk to you about rehabilitation and therapy. Where this is going to come in is really on your Medicare supplemental people. Observation status is a big deal to anyone on traditional Medicare with a Medicare supplement. Right now, with Medicare Advantage plans, you're looking at about 98% of Medicare Advantage plans. They don't care if you're in observation or not. They will cover the 20 days of skilled care. Medicare Advantage plans don't even require that you are in a hospital for 3 full days. You could be in a day in observation, go into the skilled nursing. 98% of the Medicare Advantage carriers are going to pay that, but you want to check with each one of the carriers to see how they handle observation stays. So right now, what I'm about to show you, it is a big deal for Medicare Advantage as far as after 20 days, what type of care are they going to get, who's going to pay. But right now with AEP, you really want to talk about observation stays if you have a Medicare supplement client. And this is just showing you the national median for home care is about 50,000 a year, assisted living's 46, and nursing home about anywhere up to $100,000. When you get into the population of seniors, you've got about 50% of the people that have income levels below 26,000. They have a savings below 74,000, certain chronic conditions. Um, if they have one of these stays, you're looking at Medicaid for them. It would not take long, less than a year, they'd be bankrupt. So they would go on Medicaid. And if you have the other 50% that do have savings over 74,000, they're not going to be happy losing a large portion of theirs either. So short-term care, long-term care. Uh, Aetna doesn't sell long-term care anymore, but short-term care is anything under 365 days is considered short-term care. Any benefit over 365 days is a long-term care plan. They can be identical coverage. It's just the period of care is shorter. So what I want to show you is this. We have a recovery care plan that what it does is this. It is a nursing home and assisted living plan. So you get either or of those. And this plan will pay up to $300 per day. So it'll go anywhere from $10 to $300 a day. Your normal uh, benefit is going to be anywhere from $100 a day, which is about 3,000 a month, 36,000 a year, anywhere from $200 a day, which is about 72,000 a year. If you give someone the maximum $300, that's over 100,000. It's $108,000 for those 12 months. So big benefit out of this plan. And you can choose the covered days, 90 days, 180 days, 270 days, or 360 days. You're allowed to use the plan maximum twice in a lifetime. So if someone, for instance, had a 360-day plan, they used up their benefit. If they come out for 6 months, not needing care, the plan will restore itself and you get another 360 days. Waiting periods of 0, you can give a 20-day waiting period or a 100-day waiting period. I myself, very big on first day coverage. It gives me more to talk about to the client. I can talk about observation stays and having first day coverage. For instance, I just told you that Medicare Advantage plans will typically pay the first 20 days. If you give a 0 waiting period to your Medicare Advantage client, we will still pay, Aetna will still pay the first 20 days and they'll pay it to your client. These plans are indemnity plans. They pay in addition to any other insurance, including Medicare or Medicare Advantage. So for instance, if someone had $200 a day, they go in for 20 days, their Medicare Advantage plan pays it, guess what? They're going to get a check from Aetna for $4,000. And trust me, you'll be the hero because they can spend that money on anything they like. If they have Medicare supplement, it's going to pick up from the first day. If Medicare pays it, we're still going to pay the client. If they're in observation, it's going to come in and pay the nursing facility. So ages 50 to 89, anyone I run into that has a Medicare supplement and they want to keep their Medicare supplement during AEP, um, all of them need a recovery care plan. And there's nothing wrong with giving a 90-day plan with a 0 waiting period. Nothing at all. That's a very good plan because it will take care of observation stays and get them through that recovery time. Another thing you'll find, once you start mentioning nursing homes and observation, you'll have the clients out there that have long-term care. They'll say, "Oh, we've already got long-term care. We don't, we're not worried about that." It's very important for you to know if you're not a long-term care agent or have never sold it. um, 93, the stat is real, 93% of long-term care plans do not cover the first 90 to 100 days in a nursing home. So you have a 93% chance that person that says, "Hey, I've already got long-term care," you can say, "Yes, I know that, but did you know your long-term care plan doesn't pay the first 90 days? And you need something to bridge your hospital plan to your long-term care plan." You can sell 90-day plans all day long like that. And when you explain to them observation, they're going to understand it. So how do you use it? Very simply, if their family doctor, there is no Aetna doctor that determines this, if the insured's family doctor says that they cannot perform at least 2 of 6 activities of daily living, they're going to get that bill paid. And activities of daily living are things like feeding, dressing, bathing, transferring, toileting, moving from a chair to a bed. Just 2 of those. Very easy. Or you can be cognitively impaired. No hospital stay is required. So the observation doesn't come into play here. And what you'll see, it also is a hospital indemnity. And I'm going to hurry up through this. You all know what a hospital indemnity is. This pays $10 to $300 per day. What you want to make sure that you know, $10 of hospital indemnity must be sold with the nursing home assisted living benefit. That's kind of the base plan of that. So if you're doing an e-app, for instance, because this is on an e-app, it will automatically add the $10. If you're going to use paper app, just make sure you add the $10 to it, and it's minimal. It's a minimal premium. Um, issue ages 50 to 89. You know that. I told you the maximum. Let's go. Should I stay or should I go? This is for the home care rider. Lots of people out there would rather recuperate at home. I think we all would. But this is an optional rider, and it's not a daily benefit, it's a weekly benefit. And it's important to know this. Let's say you have that client that says, "I'm never going to a nursing home." You can, if as long as you give them $10 of nursing home and assisted living benefit, $10 of the hospital benefit, you can max this rider out to its full benefit. So if you want to give someone a full $1,200 a week for 52 weeks, this becomes like a standalone home health care plan, which is very, very popular right now. So same ages, 50 to 89, $150 a week to $1,200 per week, 13 weeks, 26 weeks, 52 weeks. Same rules apply. If they cannot perform 2 of the 6 activities of daily living, if they're cognitively impaired, there's one thing added to that. As long as they're getting 3 visits per week on separate days for the duration of an hour. So it doesn't matter if it was Monday, Wednesday, Friday, each an hour, they're going to get their full benefit from this, the full $1,200 if that's what they chose. So any money that's left over is theirs to spend as they wish. They can use the money for anything. But this is very popular right now, guaranteed renewable for life. Premiums do not change because of age change or health change. This plan has been around since the mid-90s in different forms. Aetna has never had a rate increase on this plan. So that's good to know. Where long-term care plans increase all the time, this does not. And just to give you a quick idea, I'm not going to spend a lot of time on this, but if you look at the bottom here, a 65-year-old first day coverage for 90 days, 90-day benefit, 100 days is a $9,000 benefit. It's as low as $16.73. You can go up another $100 to make it $18,000 over 90 days, $31.69, and maximize it $300 per day, $27,000 over 90 days, $46.65. So very inexpensive. Even when you look at the 360 days, those premiums are very, very reasonable, and your clients can afford them. So let's go. I'm going to move through this. I don't want you to, oh, you see my graphics there. I'm going to move over the home health care. I want to, if we have time to go back, the home care rider is good, but I want you to see this part. Payment rates in Medicare Advantage is the second largest cut, 156 billion. In the beginning, when this was passed and it went into effect in 2013, the government actually wanted to cut Medicare Advantage carriers. The government felt, hey, we're paying them too much money. We don't need them. Well, something big happened. They came to their senses and they said, you know what? We do need Medicare Advantage. Medicare Advantage is good. This 10,000 people we have every day coming on to Medicare, aging in, we can't handle all of those ourselves. We need to offload those to the Medicare Advantage companies. So they said, you know what? Let's slow those cuts way down. So what they looked at is this: Medicare Advantage enrollment is increasing. And you had 19,000 last year enrolled, and you see it keeps going up and up. I like this slide because it shows the percentage of private plans, Medicare Advantage plans in each state. And if you look at the tab right above the US, you'll see national average 2017 was 33%. A third of Medicare recipients are on Medicare Advantage plan, and the government wants there to be more. In the new 2019 Medicare New Book, there was a little controversy that the government was leaning more towards Medicare Advantage plans than they were Medicare Supplement. And that does make sense because they're wanting people to get off of traditional Medicare and go on Medicare Advantage. But I just wanted you to see that. So what doesn't kill you still requires a copay. I'm going to show you an example here. And I'm using the Humana choice here in Indiana, Kentucky. I'm in Kentucky right now. I want you to see, most popular plan is the zero premium plan. That's with all carriers. And we all know why, because it's zero premium. When you look at that, you'll see inpatient hospital, $350 copay, days 1 through 5. That's pretty typical. Skilled nursing, there's the 20 days that are paid, no copay. You have a $167.50 copay per day, days 21 through 100. Specialist, $45 copay, primary 10. Emergency room, 80. You also have radiation therapy. We all know cancer related tests, anything that involves cancer treatment, 20% copay, 30% if you're out of network. Physical, occupational, speech therapy. This is one that's overlooked a lot unless you talk to a client that just got out of maybe cardiac rehab, some type of outpatient rehab, where they've had to pay $40 per visit. They may go 2 or 3 times a week, and it lasts for 4 to 6 weeks. That's a lot of money out of their pocket. So with all of that being said, anytime I run into, and this is typically, well, this is anytime, but typically when it's lock in and there's no way that I can change that Medicare Advantage plan over to a Med Sup or give them my Medicare Advantage plan, I always say this to them. You know, the 3 most costly out-of-pocket expenses you have with your Medicare Advantage plan are hospitalization, recuperation, and cancer costs. So those are the 3 things I concentrate on when I get into that home. I want to add, if I can't replace that Medicare Advantage plan, I want to add to that Medicare Advantage plan because I know once I get my foot in the door and I get an Aetna policy in that home, I've got a great chance of during the next open enrollment, I can come in there and give them my Medicare Advantage plan. So that's important to make sure you're going to take care of those three things. And when you look at what the costs are for those three things, here's what I'm talking about when I say hospitalization, recuperation, cancer costs. That hospital copay, just one stay, if they maxed out the 5 days, $1,750. The skilled nursing care, 167.50 is about 5,000 a month. The actual dollars for 80 days is 13,400. It would max out at the 6,700. Now remember, that's the out of pocket for the calendar year. If they're in that nursing facility over January 1st, they're going to be paying more and more out of that. So it's important to know. Also, when a client is in a nursing facility over 100 days, that out of pocket doesn't mean anything anymore. They do have to start paying again. So under 100 days, 100 days or less, you're going to be exposed to that 6,700, whatever the maximum out of pocket is. But over 100, it could be the $5,000 or $6,000 a month. Cancer treatment, 20% up to the maximum. And again, when is that cancer treatment going to start? Is it going to start in October, November, to where you use up your out of pocket, then you're into a new year? And there's that outpatient rehab copay, 40 visits, 3 visits, 8 weeks, it's almost $1,000. So the flex, hospital indemnity flex, we've for any of you that have ever looked at our hospital indemnity plan over the past year, this flex plan has been out about 6 months. And what we've done, we've restructured a couple of benefits and made it more affordable. So if you've looked at us in the past and you thought, oh boy, that's not competitive, we are. So what I want you to see is this benefit plan. There's option one. Option one is a lump sum hospital indemnity. So, for instance, it'll pay anywhere from $250, that's the units it comes in, all the way up to $2,500. If the patient, if your insured is in the hospital for 24 hours, it will pay that lump sum benefit. And it pays observation stays. So it doesn't matter if they're inpatient or outpatient. Once they hit that 24-hour mark, um, I'm sorry, excuse me. Once they hit that 24-hour mark, uh, they're going to get paid the full benefit. Now, option two, here's where Aetna has changed it. So the daily benefit, what you have is this. It's $10 a day, up to $700 per day. And the way that we've structured it now is this. You can choose the number of days that fit that Medicare Advantage plan. So for instance, in using the Humana example, I had 5-day copay. I can choose anywhere from 3, 4, 5, 6, 7, 8, 9, 10, any of those days in between, or 20 days. But for this example, I'm choosing 5 days. Then I can give them the $350 per day that they need, so I can pinpoint exactly the benefit they need. There's no waste there. With all the fats trimmed off of it, we give them everything that they need. If they're in observation, it pays. If they're not in observation, they're an inpatient, it pays. Let's say that they're in less than 24 hours. We will pay 50% of the daily benefit. So they're going to get something even for that um, observation stay. So basically, I'm always choosing option two because it's so much cost effectiveness to it that it's about 60% less than what we used to charge. So what you're looking at is this. You've got riders. This is part of what I said earlier about recuperation. The skilled nursing, $10 increments, goes all the way up to $200 a day, days 1 through 20, You can choose 21 through 100 or 1 through 100. And remember this, if you choose to have it start on the first day, remember it's an indemnity. We're going to pay the insured no matter what, in addition to anyone else. You also have these other riders. Doctor's office visit, $10 up to $60 per visit, 20 visits per year. Outpatient surgical procedure, $250 units up to $1,500 per surgical procedure, and it's payable one time per year, calendar year. Hospital emergency room visit or ambulance service. This is a flat $200 and it's payable 2 times per year. So a trip to the ER, it pays. Ambulance ride, it pays. Lump sum cancer, fixed indemnity. This is a big, big deal. When you're talking about that maximum out of pocket, the first occurrence of diagnosis of cancer, internal cancer, you have the choice of $2,500, $5,000, $10,000 benefit. It's payable one time per lifetime. So if it's used once, it'll maximize the payment, and then it terminates the rider. Last but not least, outpatient rehabilitation rider. You get 15 or 30 visits. It's $50 per visit. That is a great, great rider. So don't try to sell your client all of these riders. It'd be way too expensive. So what I've got here, and I'm going to show you an example of what I would sell, but pre-existing conditions are only 3 months. Issue ages 18 to 89. And here you go. I use the example of a 65 to 69-year-old, daily hospital indemnity, $350 a day, days 1 through 5. The base plan premium would be $29.01. And again, you could just sell someone that and take care of that immediate hospital charges, and they would be happy with that. If you want to add the skilled nursing facility, day 21 through 100 at $170 per day, it's an additional $13.17. I did a $5,000 lump sum cancer, $14.42, and outpatient rehabilitation. I maximized that 30 visits at $50, and it's $5.49. But what I want you to see is the total premium is $62.09. I will typically let a client know, hey, if you want to be put on a Medicare supplement, we can do that. You don't have to worry about copays and deductibles anymore. What you're looking at is with your premium, with your Part D drug plan, you're looking at somewhere probably between $180 and $200 a month. Or what we can do, you keep your Medicare Advantage plan, and we fill the gaps for hospitalization, recuperation, and cancer costs. And it's only $62.09. Your premium's not going to increase because your age changes or your health changes, and it's guaranteed renewable for life. And they will always go, well, I'd rather do that. I'd rather do the $69. You know what? I think that's the best thing. So they're going to go in the direction you want them to go. And again, it's always doing what's best for your client, but this is what's best for your client and what's best for you. So this is a very reasonable premium to take care of those three big issues. So here's different packages that you can put together. Again, you can make this plan as inexpensive or as expensive as you'd like, depending on the benefit. Cancer, heart, stroke. I just showed you the rider, the 2,500 up to the 10,000, which is a mini version of this cancer, heart attack, or stroke plan. I was never a big cancer agent. I would never really go out and push that cancer benefits, because what I was used to is just a schedule of benefits to where if they had a tumor, it was $500. A brain tumor, that's all they would pay, $500. Something smaller would be $250. So It's like, what's really the use? That's not going to pay for a whole lot. With these new lump sum benefits, totally changed my tune on that. For an individual, it's hard enough when you get a diagnosis of cancer. There are um, so many different costs that are associated with cancer, directly and indirectly. And if you look here, when you're talking about getting treatment, if you live in a big metropolitan city, you probably have a good cancer hospital there. If you don't, or you want to travel to the place that does have it, you're talking about spending money on travel, hotels, meals, and you're not going to go alone. So, especially with Medicare Advantage and having 20% of that you have to pay, it's very important to have something that comes in and will pick that up. So, what I want to show you here, I'm going to go back to the one slide. It's amazing to me that 1 out of 2 men, 1 out of 3 women will develop cancer during their lifetimes. 1 out of 4 deaths are from heart attack. So we all know someone, and typically that's what you're going to be asking in the home. Have you ever known anyone that's had cancer? And I know I would raise my hand, and my family, friends, unfortunately, it's common. So it's really just bringing it up. If you bring it up, you'll be amazed at what happens. So here we go. Cancer insurance. You can buy a plan. Benefits range from $5,000 up to $75,000. It's $5,000 increments. Your typical plan that you sell is going to be anywhere from $10,000 to $20,000. When we're looking at Aetna company wide, that's normally what people are purchasing. And what a lot of the agents are saying out there, for about $1 a day, that would be a $10,000 plan, you can have cancer coverage. And that seems to really resonate with people. It's guaranteed renewable for life, and it's payable one time per lifetime. So if you use your cancer portion and you do not have the heart attack or stroke rider, that policy would end after it pays. But if you do add the heart attack or stroke rider to this, the rider would be for the same amount that you choose for the cancer. So if you have a $20,000 cancer coverage, you're going to also have the $20,000 for the heart attack and stroke. So if cancer benefits are paid out, you still have the heart attack stroke benefit. If the heart attack stroke part is used, you will still have the cancer part active. So can you use both of those? Yes, you can. God forbid someone was diagnosed with cancer and then 2 weeks later they had a heart attack, they're going to get paid on both of those. So very important to make sure cancer coverage is with all of your clients. You're going to find that these plans will stay on the books. People that have cancer insurance do not want to drop it. And I can't stress enough, having plans, a cancer plan, a dental vision hearing plan, a recovery care plan, surrounding your Medicare Advantage plan or your Medicare supplement plan with ancillary products, or as we call them at Aetna, we call them complementary products. Surround that product with these ancillary plans, and it makes them sticky. They stick in the house. It's very hard for another agent to get in behind you and to get rid of everything. There's just too much to untangle. So if there's one thing that I can tell all of you, this year we've been training so much on ancillary, and the reason is that they know once you get the plans in there, it's going to be your home. You will own that home. They're never going to get rid of you. And each product you add, that that is just going to add to your portfolio and your renewal. So let's see here. As I said, 5,000 to 75,000. Issue ages are 18 to 89. You can have an individual plan, individual and spouse or domestic partner. You can have individual and children, family, lump sum benefit, and the lump sum benefit amount is for each of those covered persons on that plan. And here's one thing that Aetna's doing that I know of no other company that's doing. If you use the younger spouse, a lot of times you may have an age gap between the spouses. Maybe it's 5 years, maybe it's 10 years, maybe it's more. But if you take the youngest spouse and put them as primary, that's the premium you'll pay for both. So if you have any of the clients out there that have this age difference, the agents use that as a selling tool, and it really does work. And like I said, I think we're the only ones that are doing that. It's 30-day waiting period. Once you're on the plan, after 30 days, it's in full force. And again, it's guaranteed renewable for life. Let's see. I want you to see one other thing here. The maximum out of pocket for Part D drugs. I don't know if you've ever thought about this, but there is no maximum. There is no out-of-pocket maximum on Part D drugs. And when you start looking at what drugs cost, if you look down at the very bottom here, the last drug, Revlimid, that is a very popular cancer drug. The annual cost for that is $11,538. So when you talk about cancer, anti-nausea medications, any of those things are very, very expensive. And they can really bankrupt your savings, your life. So make sure your clients have these. I know at Aetna, every time we have a learning lunch with all the employees, you don't know how many of these the employees buy because they know how important they are. So make sure that your client knows that. I'm going to back up here, and I apologize for doing this. I got a few more minutes here. I want you to see one other thing. When you have a client that has maybe they have health conditions where they can't get anything. Maybe they have memory loss. Maybe they have Parkinson's. Maybe they had cancer a year ago. They've been cancer free for a year. They had open heart surgery a year ago. There's not a whole lot that's available for those type of people. This Home Care Plus plan through Aetna, what's so wonderful about this? It's a standalone home health care plan. And I know I told you earlier that you could have the recovery care rider for home care be a standalone. This is a true standalone, and the reason we have this is all because of its underwriting. It only has a 1-year look back. So if your client, as I said, had cancer a year and a day ago, but they've been clear since, you can write them this plan. If they've had open heart surgery a year and a day ago, you can write this. If they have Parkinson's today, you can write it. Memory loss, you can write it today. So what I'll take a couple of minutes and show you. It looks a lot like the rider for recovery care. It's $150 per week, up to $1,200 per week, 13 weeks, 26 weeks, 39, and 52 weeks. Same thing, you can maximize it, use it twice in a lifetime, and it also has a hospital indemnity. And I'll tell you something about the hospital indemnity. I cannot sell our flex plan, our recovery care plan, our Medicare supplement plan to someone that has Parkinson's or that has memory loss. I can give them this hospital indemnity rider within the Home Care Plus. So if you have clients out there that haven't been able to get any type of hospital indemnity plan, this is available to them. So don't just look at it as a home care plan, look at it as a hospital indemnity also. So you got both of those. And this also has the lump sum cancer rider, the 2,500, 5,000, 10,000, and the hospital emergency room visit and ambulance service indemnity rider. So all of that combined, I want to show you the rates here. It's also very reasonable. So at Aetna, it was important to them to make sure that the agents are taken care of, that your clients are taken care of, and that when you're in a home, you have something that you can offer that client. And whether it's cancer, home care plus, recovery care, or hospital indemnity flex, there's always a plan that's available for them depending on the underwriting or the what's wrong with them. So let's talk about this. Jeff mentioned the dental vision hearing. I didn't know that he wanted to go over that, but briefly, Aetna has a brand new dental vision hearing plan. I don't have slides up for that. I apologize. It comes in two different benefits. There's a $1,000 benefit. There is a $1,500 benefit. You're looking on average of about $31 a month for the $1,000 benefit and about $35 to $36 for the $1,500 benefit. I just took out one of these plans. I recently went to the eye doctor. Hadn't been to the eye doctor in 20 years. It costs $250 for the full exam. What we have on that dental vision hearing plan, you do not have to use a network, but there are networks available. So if someone wants to keep their dentist or their eye doctor or their hearing doctor, they can keep all those doctors and the plan will pay. But if they choose to use the network, there's going to be substantial discounts in that. For instance, when I went to the eye doctor, I asked, do you use iMed? Do you belong to iMed or what's called VSP? And they said, yes, we have both. I said, well, can you tell me what this would have cost me? They said, well, your total exam would have been $80. So that right there told me I need to get a plan. Just for the networks alone. And what's wonderful is this, you have most dental vision hearing plans, and this is no different, where it'll pay 60%. There's a $100 deductible. It'll pay 60% the first year, 70% the second year, and the third year and after is 80%, up to the maximum. You can use these network discounts right away. You get your card in the mail, you can use it right away. So the eyeglasses that I have to get are going to be about 60% less than what they would have been. And that pays for it right there. So again, I apologize, I don't have slides for that up. But I urge you to look at that dental vision hearing plan. It's very competitive. We do more, you get more bang for your buck, so to speak, because of these networks. So that $1,500 maximum, if you're getting a 50 or 60% discount, it's going twice as far. Same thing on dental, same exact thing on dental and on hearing. The bulk of the benefit is for dental. You can use the entire amount for dental. They will give you $200 every 2 years for eyeglasses, and they will give you $500 every 2 years for hearing aids, which is not bad at all, plus with the discount. So I urge you to look at that. And again, no underwriting questions on dental vision hearing. It's guaranteed issue. So it's very good to have that. When you're talking about someone turning 65, aging in, normally they're losing their dental coverage, their vision coverage. So you have a lot of people that are interested in dental vision hearing. It's the lead product with a lot of telesales agencies and agents right now, because they mention dental vision hearing, and that brings them in to sell them all sorts of different products. So any questions? I know we're down to like the last 5 minutes, and I know I jumped all over the place, and I apologize for that, but let's go ahead and open it up.
Well, Jamie, if you could, while we're waiting for some people to maybe type in a couple of questions here, could you go back and define what a period of care would be inside the flex plans? Could you do that for me, please?
Yes, I can. I can do that. Yes. Well, if I was going the right way, it would help. Okay. Let's see here. I'll get you back where we need to be. Period of care. All right. A period of care is this. Um, a period of care is every 60 days. So if your client comes out of the hospital, used up their 5 days, after 60 days of exiting that hospital, their benefit will restore. They'll have another 5 days. If the insured is only in the hospital 2 days and they have a benefit for 5, those 3 days are still available to them. But after 90 days, it'll go back up to 5. So that is the period of care for the hospital, which is like that on all of the plans, whether it's hospital indemnity recovery care or home care plus, they're all 60 days.
Okay. And inside some of these plans, I thought I had seen something where it may actually help you with going to the doctor, getting a reimbursement for that. Is that still true, or has that been changed in some of the plans?
No, that's still here. If you look on there now, you'll see doctor's office visit. That's the one you're referring to.
Hmm.
That benefit, yeah, that's $10 units. You can go all the way up to $60, and it'll pay for 20 visits.
Okay, outstanding. So
And
if I was on a zero premium MAPD plan with a $10 or $15 copay, I would just turn that into you guys, and you guys would reimburse me, correct?
that's exactly right.
Okay.
And there really is no claim form they have to fill out. If it's just the bill and their policy number and their name, that's really all that they need.
Okay.
Very
And I
easy.
guess I guess that would be another question that we got that popped up is to uh, to activate the benefits inside of that. What would I need to do? Would I need a hospital bill? Would I call in? Would I fax or email that? How would I activate that as the beneficiary?
There's a form called the UBO4, and that is from the hospital. It will show the day you entered the hospital and the day you exited the hospital. And it doesn't matter if you're inpatient or outpatient, it's going to have the same information on it. So that's all that they will ask for is that UBO4, nothing else.
Okay. And as far as the observation and it being admitted to the hospital, what are some things that we can educate the agents to help tell the client what they need to be asking about when they're there so that they know what their actual visit is being defined as, or can they actually request to be admitted versus observed?
You can request to be admitted instead of observation, but what you have to understand is this. Uh, if the hospital knows that it's not a good admission and they're not going to get paid by Medicare, the odds are you're not going to be admitted. And that's where the problem comes in. Whoever holds the money and distributes the money gets to make the rules, and that happens to be Medicare. So hospitals are really at their mercy on what they're going to pay and what they're not going to pay. What I would do is this: um, the observation notice that the hospital gives out. I have that on PDF form if anyone would like it, and I carry this into the home and say, Mrs. Jones, once you get this form, it's too late for me to help you. And that seems to strike a chord with people because they know this is what's happening right now at the hospitals. Um, like I said, Medicare's figured this out. It's been going on for years. This has been going on now about 6 years. It's just now, like I said, in the past 18 months, Agents are coming to me now saying, hey, I've heard about that observation. My client was in there. So it's getting more and more prevalent. You've got 1.9 million people were held in observation last year. And again, they have this down to where once that form is signed or not signed, they've let you know what you're responsible for. So it's really hard. The only way to protect them is to make sure that they have a plan.
All right. All right. Well, we're almost to the end of our, well, we are actually at 10 o'clock. Just want to remind everyone that if you don't have this appointment, you can do that very easily through your electronic contracting portal with Messer Financial Group. If you're having some issues with that, please give us a call at 866-568-9649. We'll be happy to assist you. Ask for somebody in producer support. We will also have this webinar recorded. We did record it today, and it will be up in the next few days in the Messer University section, so you can go back and review at your leisure. Also, if Jamie will be kind enough to share some of these slides with us, I'll be happy to send that out to those people that participated today. And we appreciate everybody being on today. Jamie, thank you so much for your time and efforts to help educate the agents so that we can do a better job in the field servicing our clients. Again, everyone, if you have any questions. Yep, go ahead, Jamie. I'm sorry.
No, I'm sorry. I was just going to say, everyone have a great AEP, and I appreciate you listening. Thanks, Jeff.
You got it. You got it. And as a reminder, everyone, not only do they have great indemnity products here with the supplemental lines, but they're also doing a terrific job at Aetna with their Med Advantage and their Med Subs. If we can answer questions about that for you, please let us know. And please make sure that you're doing everything that you can to make sure that you're ready to sell, not only with Aetna, but with any of the other carriers that you have with us, so that we don't have any issues with compliance as we move into AEP. Again, any questions, please call us here today, 866-568-9649. Ask for producer support or to speak to one of the marketing directors, and we'll get you what you need. Thanks, everybody, and have a great day. Have a great week, and be safe out there. Thank you.